Hello all, welcome to commerce classes. In this class, we will discuss about the methods of valuation of goodwill. There are three different methods to calculate the value of goodwill. The first method is average profit method. There are two sub methods in this method: simple average method and weighted average method. Second method is super profit method. Next, third method is capitalization method. In this method, again there are two sub methods, that is capitalization of average profit method and capitalization of super profit method. In this class, we will discuss about the capitalization of average profit method. Then capitalization of average profit method. Under this method, we have to ascertain what amount of capital required for earning given amount of average profit. So, under the capitalization of average profit method, we firstly calculate the average profit. Firstly, we calculate the average profit and then assess the capital needed for earning such a calculated average profit on the basis of normal rate of return. Such capital is called a capitalization value of average profit. So this method is to ascertain the how much capital is required for earning an average profit of the business organization. For better understanding of this concept, we will give an example. Here you wanted to start a new business and you have to invest a capital of rupees 10 lakh. Capital of rupees 10 lakh and normal rate of return is 10% and normal rate of return is 10%. Then what is the normal rate of return? Normal rate of return is the rate at which profit is earned by the normal business under normal circumstances. It means profit earned by the business organization under the normal circumstances. It is the profit. Normal rate of return is a profit earned by the business organization which capital is invested in the business. Then you are wanted to start a new business with a capital of rupees 10 lakh, then normal rate of return is 10%, and at the end of the year you will earn a 1,20,000 rupees profit. And in the next year your friend also wanted to start a new business, then here also NRR is 10%. Here also NRR is 10%. Then he also wants to earn a profit of rupees 1,20,000. He also want to earn a profit of rupees 1,20,000, means a future maintainable profit of rupees 1,20,000. Then how much your friend is required for earn a profit as you earned, means a average profit. How much your friend is capital is needed for earning a profit of rupees 1,20,000. Then we have to calculate the capitalized amount. Capitalized amount is equal to average profit. Here it is you are earning a profit of rupees 1,20,000 at the end of the year. It is your friend also want to earn a profit of rupees 1,20,000. Then it is a average profit. Then what is the rate of NRR? NRR is a 10% into 100. Then capitalized amount is rupees 12 lakh. capitalized amount is rupees 12 lakh. Then your friend also wants to started a business, then he also wants to earn a profit of rupees 1,20,000 at the end of the financial year. Then there also NRR is 10%, and how much capital is required for earning that profit means average profit of rupees 1,20,000, it is a 12 lakh. He has to invest a 12 lakh rupees capital in the business to earn a profit of rupees 1,20,000. Here it is a clear. Then we will move on to the next. Then capitalization of average profit method. Under this method, the future maintainable profit of the business are capitalized by applying the normal rate of return. Here we calculate the capitalized amount on the basis of the normal rate of return. There are two approaches to ascertain the value of goodwill. The first approach is net asset approach. Second approach is liability approach or actual capital employed approach. In the first approach, that is net asset approach, what are the steps are there to calculate the value of goodwill? The first step is calculation of capitalized value of business. Here CVB. CVB is equal to future maintainable profit divided by NRR into 100. Then after calculation of CVB, second step is to calculation of net tangible asset. NTA is equal to total tangible assets minus outside liabilities. Then after computing the net tangible assets, the next step, third step is to calculation of goodwill. Here goodwill is equal to CVB minus NTA. C means capitalized value of business minus net tangible assets. Then next approach is, second approach is, that is actual capital employed approach, nothing but liability approach. What are the steps are involved in this approach to calculate the value of goodwill? The first step is calculation of normal capital employed. Here is the formula to calculate the normal capital employed is equal to future maintainable profit divided by NRR into 100. This formula is same as calculation of CVB. Same formula here, CVB and NCE. Then second step is calculation of actual capital employed. So actual capital employed is equal to paid up capital plus surplus plus reserves minus goodwill at cost. It is the average capital employed is total of paid up capital, surplus, reserves, then deducted goodwill is deducted from these total of capital, surplus and reserves. Then third step is calculation of goodwill. So goodwill is equal to NCE minus ACE. Is it clear? So there are two approaches to calculate the value of goodwill under the capitalization of average profit method. So all formulas are cleared. Then next we will move on this one example. It's an illustration. From the following particulars, compute the value of goodwill of Vijaya Company Limited. Then future maintainable profits means average profits of rupees 15,000. Then next one is normal rate of return on capital invested at 15%. Then value of net tangible asset rupees 65,000. They directly given in the problem. Net tangible asset of rupees 65,000. There is no need to calculate a net tangible assets because they directly given in the sum. Then solution, we have to calculate the CVB, calculation of CVB. CVP is equal to future maintainable profit divided by NRR into 100. Then future maintainable profit given in the problem of rupees 15,000. Then NRR is 15% into 100. So CVP is rupees 1 lakh. Then second step is calculation of NTA, net tangible assets. Net tangible assets is rupees 65,000. So as given in the problem. Then final step is to calculate the value of goodwill. So goodwill is equal to CVB minus NTA, capitalized value of business minus net tangible assets. Here we calculate, as already we calculate the CVB 1 lakh rupees minus 65,000 NTA. So value of goodwill is rupees 35,000. Is it clear? So value of goodwill is rupees 35,000. Thank you.